Strategic business leader. Governance area we have covered so far. Ethics area we have covered so far. And we started the area of risk. And there are 3 chapters for risk, chapter 11, 12, and 13. Governance, ethics we have covered. Now we are going to cover. There are 3 chapters relating to risk. Chapter 11 we have completed internal control system. According to COSO, there are 5 components of internal control system. Yes. There are 3 advantages. There are certain objectives of internal control system. And out of the components of internal control system, one component is information system, and information system is having 4 types. And the information is having some qualities, characteristics for good information. So chapter 12 is about internal audit and audit committee. Chapter 12 is about internal audit and audit committee. So let's discuss internal audit, activities of internal audit. Who is internal auditor? External auditor is a third party coming from external audit firm whose main role is to express opinion on a financial statement. Mean report on a financial statement. Mean external auditor provide audit report. Internal auditor is an employee of company. As per corporate governance code, director not only should implement internal control system, they should review internal control system. And to review internal control system, it is better company must be having internal audit. Who appoint internal auditor? Company management. He helped the company management in reviewing internal control system. As per COSO, the 5th component of internal control system is monitoring of control. Who will monitor the internal control? Internal audit. Mean on regular basis, he will review, monitor internal control system. If there are any weaknesses, he will report to the management. Not only he report weaknesses, the recommendation for improvements in how management can improve those weaknesses. But internal auditor not only review internal control system, he performs some other assignments, some other activities in the organization. Means company management can take help from internal auditor in so many areas. What are the areas where management can take help from internal auditor? We are going to discuss. Mean activities of internal auditor mean what he perform in the organization. Mean the areas where management can use internal auditor. So activities of internal auditor mean role of internal auditor or works of internal auditor. So there are 3 types of activities that internal auditor perform in the organization. Internal auditor performs some internal reviews. Internal auditor performs some operational assignments. Internal auditor performs some other assignments. Except operational and internal reviews, he performs some other assignments. Assignments mean not his routine, but management can ask him if it is required. Internal auditor performs some internal reviews in the organization, and those internal reviews are of 4 types. He performs value for money review. He performs
On the external reviews.
Yeah, internal reviews. Internal reviews, there are 4 types of internal reviews that internal auditor perform: value for money review, best value review, IT review, and financial audit. So internal auditor performs some internal reviews within the organization, and internal reviews are of 4 types: value for money review, best value review, IT review, and financial audit. What is financial audit? Financial audit is the main work of internal auditor for which corporate governance require there should be internal auditor. And what is that? He review the internal control system and report weaknesses in the internal control system to management. Not only reporting weaknesses, he is reporting weaknesses with the recommendation for improvements. The main work of internal auditor for which corporate governance require internal auditor should be there, for which also says internal auditor should be there for monitoring of internal control. What is monitoring of internal control? Financial audit is main audit. Except financial audit, internal auditor performs some other reviews in the organization. Other reviews are value for money review, best value review, and IT review. What is value for money review? Value for money review means internal auditor reviews 3 E's of the company. He assessed 3 E's. What does mean by 3 E's? Economy, efficiency, and effectiveness. Economy, efficiency, and effectiveness. What is mean by economy? Economy mean lowest cost. Economy mean lowest cost. Internal auditor assess whether company acquiring resources at lowest cost or not. Whether company acquiring resources at lowest cost or not. If company is going to buy material, whether they are buying at lowest cost. If company going to buy asset, whether they are going to buy at lowest cost. If company going to hire employees, labor, whether company is hiring them at lowest cost. If company is going to obtain any loan, whether company is obtaining a loan at lowest interest rate or not. Economy mean whether company is achieving lowest cost or not. Who will assess? Internal audit. What is efficiency? Effectiveness of resources. Efficiency. Effective use of resources. No, efficiency. Effective use of resources. Or efficient use of resources. Efficient use. What is efficient use of resources? Mean minimum input, maximum output. Minimum resources, maximum unit production. So internal auditor will assess whether company is producing required output through minimum input, or company is producing with minimum input, maximum output or not. You being a student will become efficient. How? If a 4-hour work you are doing in 3 hours, you are efficient. Mean you have utilized 3 hours and you have performed or you have completed the work of 4 hours. If you are not using mobile while studying, you can perform better. But if you are using mobile while studying, your efficiency will become negative. Because 3-hour work, you might be completing in 10 hours because you are using mobile. He's distracting you from your main task. The internal auditor will assess whether company is achieving efficiency, especially in production. What is meant by effectiveness? Effectiveness means objective meeting. Internal auditor will assess all the activities working in the organization, whether those activities objectives are met or not. Because if objectives are not met, companies are wasting money and time. Companies are wasting resources. So he will assess whether all activities meeting their objective or not. If they are meeting objective, mean activities are effective. So value for money review mean internal auditor will assess the money company is spending, whether against that money company is achieving value mean benefit or not. And company will achieve a benefit when there is economy, lowest cost, efficiency, as well as effectiveness. Can you understand this? Value for money review mean assessing three E's: economy, efficiency, and effectiveness. So internal auditor performs some internal reviews, and internal reviews are of four types: value for money review, best value review, IT review, and financial audit. Financial audit, value for money review we have discussed. Internal auditor also perform best value review. Best value review mean internal auditor assess the four C's of the business. What are four C's? Challenge, compare, consult, and compete. Challenge, compare, consult, and compete. What's in by challenge? Internal auditor will assess whether company is meeting a customer demand or not. If challenge is that customer requiring high quality product, whether company is producing high quality product or not. If challenge is that customer require low cost, low price product, whether company is producing low cost, low price product. I mean, customer needs whether company is fulfilling or not. This is what challenge. Because if company is not meeting the challenge of customer, what they require, ultimately company will flop.
How auditor will identify that the company is making
Internal auditor, normally companies point internal auditor from any of the external audit firm. And if a person is working in any of the external audit firm, he is having a variety of task experience. Because in audit firm, you perform so many tasks. Sometimes you work as a business consultant, sometimes you work as an accountant, sometimes you work as an auditor. So they are having so much multiple task experience. So if company are appointing internal auditor firm, external audit firm, and he's having a multiple task experience, so company management can take help from these areas. These are not his main areas. His main area is financial audit. But these are the areas where management can take help from. Compare mean internal auditor will compare company product services with the competitor product services, whether company is producing better quality as compared to competitor. Consult mean internal auditor will consult a customer whether they are happy, satisfied with the product, services, or business or not. Compete mean internal auditor will assess whether company is preparing proper competition strategies or not. Whether company is competing to the competitors through their business planning strategies are. Because if company is not meeting challenge mean demand of customer, if company products are not better in comparison, if by consulting customer, customers are not satisfied, our business is not preparing proper competition strategies, ultimately business is not generating the best value mean benefit for the organization. In best value review, he will see whether management is performing properly or not. They are providing benefit to the organization or not. When you will providing benefit to the organization, when you are meeting the challenge of customer, when in comparison your goods services are better, when in consultation customer are happy, satisfied, and when you are preparing proper competition strategies.
because when we appointed as an external company, external auditor, which like a sometimes that employee is not sharing the basic details to us because we are outsider.
Yeah, exactly.
So they are hiding sometimes from us.
Yeah, exactly.
Because this is a management call or this is management call. They will not share anything.
That is a separate issue. That is a scope limitation issue, restriction on work. Due to that, you can go for disclaimer report. But here we are talking about internal auditor. I mean, what kind of activities where management asks internal auditor to perform. Internal auditor also perform IT review. IT review mean, sorry? Compete mean we'll see whether company preparing proper competition strategy. Competition strategy mean how to deal with the market. Because if they are not dealing with the market properly, ultimately your business will fail. Internal auditor also perform IT review. IT review mean if company system is computerized, he will see whether on computerized system proper authorization control are working or not, mean only authorized user through password accessing the system or not. He will see whether that IT system designed properly or not. Designed properly mean covering all the requirement of business or not. He will see whether in IT system there is continuity of operation. Continuity of operation mean he will make sure in case of any issue with the system, whether company is having a backups through which a company can recover the data and continue their operations or not. Internal auditor will see whether in IT system there is a VFM, value for money is not. Value for money mean whether this IT system is based on economy, efficiency, and mainly effectiveness mean the purpose of using the IT system is achieved by the organization or not. Value for money. Value for money. Value for money mean 3 E's relating to IT system. Whether company is using this IT system at lowest cost, using this IT system efficiently, and the main purpose of using the IT system is meta.
Then company install hi-fi system
Yeah,
like Apple system.
and those hi-fi system are very critical. You need to monitor them.
Yeah.
Who can monitor on behalf of management? Company can ask internal auditor.
But
And if he is monitoring IT system, that is called IT review, also called IT audit. And he will check whether only authorized user having access to the system, whether IT system design is a proper, mean covering all the requirement of the organization, whether there are continuity of operation, mean backups, antivirus installed or not, and he will assess VFM of IT system, mean IT system achieving economy, efficiency, and effectiveness. So what are the activities of internal auditor? Internal auditor performs some internal reviews. Internal reviews are of 4 types: value for money review, assessing 3 E's, best value review, assessing 4 C's, IT review, and financial audit. Financial audit mean review of internal control system and reporting weaknesses to management. Internal auditor performs some operational assignment in the organization. Operational assignments mean there are 4 main operations or 4 main departments of the organization. What are 4 main departments of the organization? Procurement, treasury, marketing, and human resource. Internal auditor will make sure whether these operational departments are working as per management strategy or not. They are following management policies in their work or not. Procurement. What is procurement? Purchase department. Whether while buying anything, they are obtaining a quotation from supplier or not. To see who is the supplier providing high quality at lowest price. Treasury. What is meant by treasury? Finance department. Whether they are acquiring finance at lowest cost or not. Either through equity, either through debt. Marketing. Advertisement. Whether they are capturing, attracting a customer properly or not. And HR, human resource, whether they are appointing, training, retaining, motivating people properly or not. Mean internal auditor will see whether business operations are working as per management policies are. Because if they are not working as per management policy, ultimately business will not perform better. Because every department have to work as per management policy. Can you understand this? So internal auditor performs some internal reviews. Internal auditor performs some operational assignments. Operational assignments mean whether business operations or main departments working as per management policy or not. What are the main operations? Procurement, treasury, marketing, and HR. Internal auditor also performs some other assignments. In except these, there could be some other assignment where management can ask internal auditor for help. What are other assignments? Due external investigation. External investigation. Example of external investigation is due diligence. What is due diligence? No, no.
Means verifying the validity of transaction.
If suppose business going to acquire any other company, if company going to acquire any other company, any other business, before acquiring, you need a complete detail about the investee company. So company can send its internal auditor, please go there, review their system and give us a report. What are the shortcomings in that company? What are the benefits in that company? Whether we should acquire or not? If we need to acquire, how much bid price we should offer? So that report is called due diligence report. Consolidation. If parent company going to acquire any other subsidiary, so before acquiring, you need a due diligence report on subsidiary. In due diligence report, the fair value of net assets acquired is mentioned. So that company can perform its internal auditor if he is having experience of that. Mean management will keep themselves busy in their routine work, and these kind of extra work they can send their internal auditor. This is called external investigation. Mean outside the business, if you want to investigate any other company to whom you are going to acquire, we need due diligence report on that company, so you can ask your internal. Other assignment include ad hoc investigation. What is meant by ad hoc? Ad hoc means temporary emergency investigation, like fraud investigation. If any fraud happen in the organization, in any department of the organization, so company can ask its internal auditor to perform fraud investigation. Mean find what is the cause of the fraud, who are involved in the fraud, what is the amount involved in the fraud, and recommend some measures how we can overcome these fraud in future. Because he normally appointed through any of the external audit firm, and they are having experience of investigation. What are the other assignments? Management can ask the internal auditor to help the management in compliance issues, like compliance with IAS, IFRS while preparing financial statements, compliance with corporate governance codes, or compliance with laws and regulations. They help the management. If management don't have experience of these areas, they can ask their internal auditor if he's having knowledge about these things. So he help the management in compliance with IAS, IFRS, corporate governance. CG stands for corporate governance, and L and R stands for laws and regulations. He also helped the management in preparing CSR report. Like if company have performed some social environmental responsibilities and company want to report on social environmental responsibilities in their annual report, what should be included in that annual report? Company can take help from internal auditor in CSR, corporate social responsibility reporting. So what are the activities of internal auditor? It's not necessary he perform everything in the organization. No, these are the areas where management can ask internal auditor for help. His main role is what? His main role is financial audit, mean review of internal control system and reporting weaknesses to management. But he performs some internal reviews like value for money, best value review, IT review. He can perform operational assignments or he can perform some other assignments like external investigation due diligence, ad hoc investigation like fraud investigation, compliance with accounting standards, corporate governance codes, law regulations, or management can take help from internal auditor in CSR reporting. These are called role of internal auditor. These are called areas of internal auditor. Or even if examiner asks what is the importance of internal auditor. So these are also importance mean management can take help in these areas. Can you understand this? So internal audit we have discussed. Now we are moving toward discussing audit committee because in chapter 12, there are two topics. One is internal audit, other is audit committee. So internal audit we have covered. Now we are moving towards audit committee. Audit committee we have already discussed in our second lecture, corporate governance. Audit committee, 100% non-executive directors committee, whose role is to oversee financial matters of the company. Audit committee review internal control system, financial statement, financial strategies, financial policies of the business. Audit committee monitor quality of work and independence of both internal and external auditor. And audit committee provide recommendation to shareholder regarding appointment, reappointment, removal, and fee of external auditor. We have discussed its role properly. Now we are going to discuss audit committee role specific to internal audit, internal control. Audit committee role specific to internal audit and audit committee role specific to external audit. What is the role of audit committee specific to internal control, specific to internal audit, and specific to external audit? So what is the role of audit committee specific to internal control? Audit committee also review company financial controls, whether they are operating, working effectively or not. Audit committee supervise major transaction of the business, whether they are properly approved, authorized or not. Audit committee review reports from internal and external auditor regarding controls, mean if internal, external auditor reporting to management control weaknesses. Audit committee review those reports, will find the causes behind those weaknesses and make sure those weaknesses should be eliminated. Audit committee approve annual reports, internal control statement mean if company is operating in America, according to SOX, company is required to report on internal control in the annual report as a mandatory disclosure. So that report on internal control approved by the audit committee. Audit committee review fraud and risk management of the company. And audit committee review compliance with law, regulations, and ethical policies, because these are also included in internal control mean policies of the organization. And audit committee monitor adequacy of internal control system, mean whether internal control system working effectively or not. Who monitor? Audit committee. If internal auditor is there, he will monitor. If internal auditor is not there, who will monitor? Audit committee. So these are the role of audit committee specific to internal controls. They review financial controls, they supervise major transactions, they review internal external auditor reports on internal control weaknesses, they approve annual internal control report that is going to be published in annual reports. They review fraud and risk management. They review compliance with law regulation and monitor adequacy of internal controls. What is the role of audit committee specific to internal auditor? Internal auditor review internal control weaknesses and he is working under company management. He should be independent, mean his work should not be under pressure. If he is working under company management and he is reporting management weaknesses to management, he will not be independent. So to make his independence, he report to audit committee. He should report to audit committee because audit committee can ensure his independence. Mean he should not be under pressure of company management, so that he could highlight the weaknesses of company management as well. So what is the role of audit committee in relation to internal auditor? Audit committee monitor and assess internal auditor effectiveness, whether there is a need for internal auditor or not. Who will assess? Audit committee, because if company is appointing internal auditor, company is paying a cost to him. So whether there is a need for internal auditor or not, who will assess, who will monitor? Audit committee. Audit committee review and assess the annual internal audit work plan. Mean audit committee will define annual work plan for internal auditor. Mean what he will perform in the organization. Whether he will perform his only main financial audit or there are some other areas where he need to help the management. Who will define his work? Audit committee. Audit committee will approve the appointment of head of internal audit department to maintain his independence. Because if company management appointing internal auditor, they will appoint yes man. And that yes man might not be highlighting management weaknesses. So that's why to maintain his independence, who will appoint head of internal audit department? Audit committee. Audit committee will preserve and ensure whether he is working independently without any pressure. If there is any pressure on internal auditor, audit committee try to resolve it. Audit committee check the efficiency of internal auditor. Mean with minimum time he is producing more output. Audit committee will make sure if internal auditor have highlighted any internal control weaknesses and provided recommendation to improve, audit committee will make sure those recommendations are actioned by company management. Because if management is not making any action on the recommendation, ultimately those weaknesses highlighting is useless. So audit committee will make sure whether recommendation provided by internal auditor management have performed some action to overcome those weaknesses. Audit committee will make sure whether internal auditor is accountable, mean answerable regarding their work. Is if any assignment is assigned to the internal auditor like due diligence, fraud investigation, so audit committee will review his report. Will ask a question how you have performed this. So the role of audit committee in relation to internal auditor. Audit committee monitor its effectiveness, will review its annual work plan, appoint head of internal auditor, check his independence, check his efficiency, ensure recommendations are actioned properly, and ensure accountability of internal. This is the role of audit committee specific to internal audit. Now we are going to discuss what is the role of audit committee specific to external audit. Who appoint external auditor? Shareholder. Only shareholder. But if shareholders are not aware about the knowledge of different audit firms, who are the good auditor, Audit committee provide a recommendation to shareholder regarding appointment, reappointment, removal, and even fee of external auditor. So audit committee making recommendation to the board, not board, to members means shareholders regarding appointment, reappointment, removal, and fee of external auditor. Audit committee oversees selection process when a new auditor are being considered. If company is going to appoint a new auditor, audit committee will make sure proper procedure, proper format is followed. Audit committee will approve the engagement of external auditor and remuneration of its services. Audit committee have annual procedure for ensuring the independence and objectivity of external auditor, whether his work quality is achieved and is working independently or not. Who will ensure? Audit committee. Audit committee will review the scope of auditor. In what is his role, how he is performing his role. Audit committee will make sure that appropriate plan are in place for the audit at the start of each annual audit. Mean if external auditor need some information, need access to documents, records, audit committee will make sure management is supporting him. Audit committee will carry out a post-completion audit review. Mean after completion of the audit committee will make sure whatever the report external auditor have assigned, company is going to produce that report. And audit committee provide a platform or communication channel between company management and external auditor. So that there shouldn't be any clash between management and external auditor. In audit committee is between external auditor and company management, so that every communication should be through audit committee. Because if both these parties are linked directly with each other, there could be some clashes, there could be some problems. And audit committee try to resolve any issue with company management and external auditor. I mean, if external auditor is asking these things are wrong in financial statements, management is not going to correct that. Ultimately, external auditor will qualify audit report, mean provide audit report against company. So audit committee try to resolve the issue so that the report should not be qualified. Because if auditor is expressing qualified report, this will affect the company repute as well as company survival. So they try to avoid qualification of audit report, try to convince the management to resolve the external auditor issues. So what is the role of audit committee in relation to external audit? They provide recommendation regarding appointment, reappointment, removal of external auditor. They monitor the independence and objectivity of external auditor. They review scope of external auditor. They provide a communication channel between external auditor and company management. And they resolve any issue between company management and external auditor. I mean, these 5 are the main points that we need to remember. Other you can deal with, but these 5 are main points. The role of audit committee is specific to external audit. So in this chapter 12, we have covered the activities of internal auditor. And we have covered the role of audit committee specific to internal control, specific to internal audit, and specific to external audit and chapter. So let's move towards some questions now. So we are having a question called club. There are 3 requirements of the question. Requirement A for 7 marks, requirement B1, B2 for 6 marks, mean 12 marks, and requirement C for 6 marks, altogether 25 marks question. Requirement of the question. Discuss the importance of internal audit in a highly regulated industry such as water industry that Bluff company operates in. You need to discuss the importance of internal audit in highly regulated industry like Bluff, who is operating in water industry. We can answer this part straightforward even without reading the scenario. In what is the role of internal audit in highly regulated company? He helped the management in compliance with laws and regulations. Because if companies are operating in highly regulated industry, they need to comply with strict laws and regulations, and laws and regulation compliance ensuring is must for the company. So internal auditor can help the management to ensure compliance with law regulation because he will monitor the internal control system as well as law regulation policies, whether companies complying properly. What else? What else? Importance of internal auditor, highly regulated industry. If you are operating in a highly regulated industry, highly regulated, might be companies required to perform some of the social environmental responsibilities. And it is mandatory like company need to report on social environmental. So he can help the management in preparing reports on social and environmental responsibilities like CSR report. What else? In a highly regulated industry, highly regulated industries. What else? Operating being a highly regulated industry, company need to prepare some plans, some strategies for their department, and department must follow those strategies. So whether company department are working as per management policy or not, company management can ensure company by asking internal auditor to review whether departments are working as per management policy or not, mean that operational assignment. That is also called operational audit. In internal auditor, we review whether company main operations like procurement, HR, marketing, treasury, production, they are working as per management policy or not. What else? You can explain any other activity like his main role is to review internal control system. He will review the internal control system policies adopted by the organization and will highlight weaknesses for the management. Not only highlight weaknesses, he will highlight weaknesses with recommendation for improvement so that company can establish a good internal control system. Because being operating in highly regulated industry, you need to make sure internal control system is effective or not. So he will review internal control system. Sorry? Yeah. According to requirement, we need to fit what we can write down being a highly regulated industry.
What I mean is, we don't have to read all of them. You can just answer it like now.
There are 7 marks. This means 7 marks, 2 marks each paragraph, at least 4 points you need to explain. 2 marks each. So let's read the scenario. Might be any point we can link with the company scenario. So when Bluff company, unlisted company involved in water supply, decided to establish an internal audit function in line with the new listing rules, the board approached Karen here, an external consultant. She explained that internal audit is especially important in highly regulated industries, but that it could also offer benefits to companies regardless of the industry context. The company need internal audit regardless of the industry, though this company is also operating in highly regulated industry, even Though you are not operating in highly regulated industry, there are benefits of internal audit. Karen was particularly keen to talk to John Shu, the head of the audit committee. John explained that because Bulb Company was a water supply company and was thus highly regulated, he considered it important that all of the members of the audit committee were professionally water engineers, while audit committee members should be financial expert. But all of the members of audit committee are water engineers. They fully understood the industry and its technical challenges. All three members of audit committee were non-executive directors, yes, and all were recently retired members of a Bulb executive board. So all member of audit committee should be non-executive director, but non-executive director should be independent. Independent means they should not be employee of the company in last 5 years. If previously they were working as executive director, now they became non-executive and form part of the audit committee, so they are not independent. When Karen asked about the relationship with external auditor, mean how companies having a relationship with external auditor, whether good or bad, John said that they had excellent relationship, saying that this was because the external audit practice was run by chairman's son-in-law. If audit firm is company chairman's son-in-law, this means this auditor is not independent. Who need to ensure independence of external auditor? Audit committee. I mean, we are finding some shortcomings in audit committee. They don't have financial knowledge. I mean, they are not financial expert because the main role of audit committee is to oversee financial matters of the company. So they will not be able to perform that role. Audit committee members should be independent non-executive director, but they are not independent because they were former employee, mean executive director of the company. And immediately after retiring as the executive director, they were appointed non-executive. And they are not reviewing the independence of external auditor properly because external auditor firm is having relationship with company chairman. So they will not be providing opinion against the company. Karen said that one of the essential function of internal audit is to provide assurance that the internal control which underpin financial reporting are effective. No, internal auditor not only check financial control, they check other non-financial like operational controls also, even compliance controls. But they are assessing the main role of internal auditor is to check financial controls only. She said that effective internal controls are necessary for maintaining the integrity of financial reporting and that new internal audit function could help with that. That's why a company should appoint internal auditor. So if we look at requirement A, discuss the importance of internal audit in a highly regulated industry such as water industry that Bulb company operate in, having no link with the scenario. We can explain on journal, mean why internal auditor is necessary in a highly regulated industry like this company. So compliance with law regulation, internal auditor can check, can ensure. He can report on social and environmental responsibilities. He will perform operational audit whether business operations are working as per management policy or not. And he will review the internal control system, including financial as well as non-financial controls. So we can explain straightforward. So read the answer and try to attempt this part once properly. Requirement B1 of the question for 6 marks. Criticize the ways, criticize negativities, shortcomings. Criticize the ways in which Bulb company audit committee has failed to meet best practice. I mean, you need to criticize audit committee, and we have found 3 points. Audit committee role is to oversee financial matters of the company. To oversee financial matters, they should be financial expert. While Bulb company audit committee, all the members are professional water engineers. So they are lacking financial expertise. They will not be able to review financial matters properly. And audit committee members should all be independent, non-executive director. Though audit committee, all members are non-executive, but they are not independent. Why? Because they were formerly executive directors of the company. And independence is threatened because in last 5 years, they were employee of the organization. So they are having some colleague relation with other executive directors. They might not review their policies, their strategies properly. And thirdly, audit committee need to ensure independence of external auditor. And companies having external auditor, but that is not independent. This means audit committee is not performing his role to ensuring independence of external auditor. Why he is not independent? Because he is a son-in-law of company chairman. We can prepare 3 paragraph or 6 marks. Is that?
We just got 6 months. What?
Yeah. It's just according to scenario.
Very simple.
Part B2 for 6 marks again, explain why the audit committee is responsible for overseeing the internal audit function. Now we need to explain what is the role of audit committee in relation to internal audit. To maintain independence of internal auditor, audit committee approve the annual work plan of internal auditor, so that he should be independent and should perform his work properly. Audit committee also appoint the head of internal audit department so that his appointment should be independent. Audit committee also make sure whether the recommendation against control weaknesses provided by internal auditor are actioned properly or not. Because if those weaknesses are not properly actioned, ultimately there is no purpose of internal audit work.
So you're referring to slide 7.
We need to explain the role of audit committee in relation to internal auditor.
You're
So part B1 is relating to scenario. B2 again straightforward. Part C for 6 marks. Discuss how effective internal controls can provide assurance on integrity of financial reporting. If company is having effective proper control system, through this, how company can produce or ensure integrity accuracy or true and fair financial statements. We need to explain some of the objective of internal controls that we learned in previous chapter. If company is having effective internal controls, especially arithmetic controls, through this, fraud and errors can be prevented, detected, and by prevention of fraud and errors, company can prepare reliable financial reports. So prevention, detection of fraud and errors. What else? If company is having proper internal control systems, especially authorization control, so company will be able to avoid unnecessary orders, through which company will be able to control its liabilities, and controlling its liabilities, company will be able to produce true and fair financial statements.
so this is difficult.
Like proper authorization control are working, unnecessary orders are avoided. If unnecessary orders are avoided, this means all the purchases for the business are genuine purchases. If business is recording genuine purchases, there are no fake purchases. Ultimately, company will be able to produce true and fair financial statements. If company is having supervision control, through supervision, ultimately any kind of a frauds or any kind of a fraudulent or fake records can be avoided. And through this, company will be able to produce true and fair financial statements. What else we can write down? I mean, if company is having effective control, how we can produce reliable financial information? I mean, financial statements will be true and fair. So through authorization, through supervision, through prevention and detection of a fraud, company will be able to produce true and fair financial statements. For 6 marks, we can prepare 3 paragraphs, 2 marks each. Again, this is journal having no link with the scenario. In part A, he has explained highly regulated industry, so you need to relate according to a highly regulated industry. I mean, you don't need to explain all activities under an auditor. Part B1 is purely relating to scenario. From scenario, you need to highlight 3 shortcomings of audit committee. B2 and C, general. B2, if you have understanding the role of audit committee with internal audit, you can explain easily. Role of audit committee with internal control, with internal audit, with external audit. And part C, this is common sense. But not only common sense, we have covered objective of internal control in chapter 11. We have covered different types of controls span. So by linking that knowledge, we can discuss 3 points. This is what SBL.
So it's
That's why we are going to practice these questions. So that if you face similar requirement in your paper, you'll be able to write down. But if you don't practice these questions, especially written practice, you will be lacking in paper. You need to practice these questions at least twice before going to paper. Then you will be able to tackle the paper. If you ignore these things, just studying these things while sitting in the class, not studying at home, not attempting these questions, not practicing these questions, ultimately you are losing everything. And there are some terminologies like CSR, CG that we used in previous classes, but you are asking what is CSR, what is CG? Why? Because you haven't revised previous classes. You are ignoring previous classes. Even the lectures are there, recordings are there. If you are studying this paper once in a week during the class only, you are not tackling it. You will struggle.
Hmm.
You need to cover these questions immediately after the class, immediately after the class,
Immediately after class?
or very next day to the class, or at least before coming to next class. If you are coming to class blankly, you are not capturing everything. Please make sure whatever we are going to cover in one class, before next class, you need to cover that at home. You need to attempt those questions by reading answer of the questions. We are adopting approach how to answer 6 marks requirement, how to answer 7 marks requirement, how to answer 10 marks requirement. So we are developing an approach so that we can tackle similar requirements in the paper. So we are developing an approach. If examiner asks a general requirement, how to answer. If examiner asks any requirement relating to scenario, how to pick a point and answer. So we are developing that approach. If that approach is not developed, ultimately you will not be able to pass this paper. This paper is general. Examiner will not specify you need to answer using this model. No. They provide you a scenario and there will be requirements like that. That's why we are practicing these questions before moving towards that 100 marks case studies. We are applying our knowledge on smaller case studies. From these 25 marks question, we will move towards 50 marks question now. And by having practice of 50 marks question, we'll move towards 100 marks case study. We are developing approach step by step. Please make sure before moving to next class, you must have completed previous class topics and questions because things are interlinked with each other. This audit committee role we have discussed in corporate governance, the very first lecture. Even we have already covered one question on audit committee criticism, Tomato Bank. If you have covered those questions, it's not that much difficult. Let's move forward. Covering one more question. That is yeah. There are three requirements of this question. Requirement A for 5 marks, requirement B for 10 marks, and requirement C for 10 marks. Requirement A. Explain typical reasons why an internal control system might be ineffective. What could be the reason behind poor control system? What could be the reason behind poor control system? We can explain straightforward. One reason could be lack of monitoring of control. If company is not having internal audit department, controls are not being monitored properly. And if controls are not being monitored properly, ultimately the control system will not be working effectively. What else?
Design is not suitable for that internal
Control system design is poor. Poor design of internal control system mean not designed as per the circumstances, as per the requirement of the business. Mean not covering all the areas of the organization, or might be you designed before, but after that your business circumstances, operation changes, but you didn't change the control system. What could be the other reasons?
no authorized.
Management overriding of control. Don't ask me what does that mean. We have covered in previous lecture. This term we have covered in previous lecture. Management overriding of control. What does that mean?
Management over means management.
Management overruling the controls. They themselves not following the control system. In control environment is poor. If they themselves don't bother to follow policies, procedures, ultimately employee will not follow policy procedure because management set the culture leading by example. What else?
Authorization.
Collusion. Mean if you have set the controls, but there could be fraud and errors due to collusion of staff. Means staff could collude with each other and move towards fraud. What else? Why internal control system is not effective?
Like internal control means internal auditor recommendation not followed.
Internal audit recommendations are not properly followed by the management. Mean management is not giving importance to recommendation of internal auditor. So we can explain 5 points straightforward. What is requirement B? Requirement C. First, we need to read the scenario. Always read requirement A. Make a mind, read the scenario, attempt requirement A, then move towards reading requirement B. You will automatically answer. Don't read all the requirements before reading the scenario. Just one requirement, read the scenario. In Yaya company, operation director Ben Janoon recently realized there had been an increase in product failing the final quality checks. The company quality check saying that defective units are increasing day by day. These checks were carried out in QC quality control laboratory, which tested finished goods products before being released for sale. The product's failure rate had risen from 1% of the item 2 years ago to 4% now. In 2 years back, out of total production, 1% were defective. But now they are having 4% defective. This is wastage loss that has increased too much. And this meant an increase in hundreds of items of output a month, which were not sold on to Yaya's customer. The failed products had no value to the company once they had failed QC, as the rework costs were not economic. In company cannot perform rework to make them proper. It's a loss. Because the increase was gradual over the 2 years, it took a while for Mr. Janoon to realize that the failure rate had risen, and he is concerned about this. He's not happy with this increase in failure rate. A thorough review of the main production operation revealed nothing that might explain the increased failure. And so attention was focused instead on QC laboratory. When he reviewed his operations, his production, he reviewed the material from the supplier and nothing wrong there. So now the main focus is on QC laboratory, who are highlighting the failed products, who are testing the products and stating it's failed. For some years, the QC laboratory at Yaya, managed by Jane Go, had been marginalized in the company, with its 2 staff working in a remote laboratory in far area, well away from other employees. That laboratory is too far from main operations of the business. Operations Director Ben Janoon, who designed the internal control system in Yaya, rarely visited the QC lab because of its remote location. There is no supervision. And that is too far from other operations. No other person can visit and monitor what's going on over there. And there are 2 staff members working in the laboratory. So they could collude with each other. He never asked for information on product failure. Oh, he is not asking for reports on product failure. Information system is weak to be reported to him, and didn't understand the science involved in the QC process. And he have no knowledge how this laboratory work. He's lacking knowledge as well. If he is lacking knowledge, even if he asks for a report, he will not be able to identify. He relied on the 2 QC staff, Jane Gu and her assistant John Zong, both of whom did have relevant scientific qualification. They are expert, but operation director is not expert. He's having no knowledge about the science involved regarding fail and pass product. The 2 QC staff considered themselves low paid. Oh my. They are low paid, you are not paying them properly. From where they will meet their routine expenses? Through frauds. While in theory they reported to Mr. Janoon, in practice they conducted their work with little contact with the colleagues. There are more chances of collusion between both the staff members. The work was routine and involved testing product against a set of compliance standards. A single signature on a product compliance report was required to pass or fail in QC, and these reports were then filed away with no one else seeing them. And they are testing, they are rejecting, and they are preparing the reports. Nobody else is even reviewing those reports. Because if any other person is reviewing that report, they can ask the reason why they failed. So those failure rate can be reduced by checking the reason behind the failure. But there is nobody who is reviewing those reports. They are relying only two people. They are testing, they are rejecting, and they are preparing reports. And Mr. Operation Director, don't visit that area. They are operating rest of the other employees. I mean, everything is in the hand of these two people. It was eventually established that Jane Gu had found a local buyer to pay her directly for any of Yaya's product which had failed the QC test. And he is selling those failed products to any of the local buyer. Okay. The increased failure rate had resulted from her signing products as having failed QC when in fact they had passed. Oh my God. He's failing the past product as well. Might be he is in connection with the buyer. I will send you the correct product. After that, we will distribute money with each other. And nobody's reviewing his reports. Nobody's asking. The increased failure rate had resulted from, she kept the proceeds from the sales for herself.
She is crazy.
She will want the proceed should be more. How proceed will be more? If she is transferring more products to the buyer.
She's crazy.
That's why she is failing even the past products. And also paid her assistant collusion as proportion of the proceed from sale of the failed products. So there are chances of collusion, not chances, even evidence they are collusion.
The name of this woman.
Her name is Jane Gu and her assistant. So requirement A explain typical reason why an internal control system might be effective due to lack of monitoring, due to poor design of the system, due to management overriding of control, due to collusion of staff member, or due to no action on recommendation for improvements. If control weaknesses are highlighted, management is performing no action for improving those weaknesses. Requirement B of the question for 10 good marks. Explain the internal control deficiencies that led to increased product failure at Yaya. 5 control deficiencies you need to find from this scenario. First, Mr. Benjanoun is not visiting that laboratory. Because if he's visiting that laboratory, he can highlight the issues, he can ask them, he can review their work, even he can review whether the failed products are only failed, are no past products included in them. So this is the main issue because he is not visiting. So there is lack of supervision, lack of monitoring. That's why the product failure rate is high. Second, there are staff working on far locations separate from other employees. Because if they are working with other employees, especially the production department, they can ask, they can check which products are failed.
It's like the other.
Because if they are working with closely with each other, production manager, production staff, they can ensure whether these products that have been failed through laboratory tests are actually failed or there are some past products as well. So these things could be highlighted. Thirdly, there are 2 staff members and they are responsible for all, mean there is no segregation of duty. mean they are testing, they are preparing reports. If there is segregation of duty like separate staff are testing, separate staff are preparing reports, and separate staff are selling, then things could be highlighted through any of the staff. But as no visit, monitoring, separate location, and then segregation of duty. What else? Mr. Operation Director doesn't have detailed knowledge about the products, lack of expertise, knowledge about the products. Because if he's having knowledge about the product, he could ask the detail. He could ask the reason, like any production reason, any raw material reason, any design reason, what is the reason? So he could find or control these issues. But as he is lacking knowledge, he is lacking expertise, detailed knowledge about the product, scientific knowledge especially. So that's why he is unable to even ask a question and highlight. He should be having some expert knowledge about the products. Or he should assign any other person reviewing laboratory work who is having some scientific expertise. What else? 4. What's the 5th one? What could be the 5th one? 5th reason is collusion between staff members. The both staff are responsible for everything and they collude with each other. Because the money they are receiving by selling the failed products, they are distributing with each other. And there is no other responsible person over there. So these 5 reasons we can explain specific to the scenario. Requirement C for 10 marks again. Discuss the general qualities of useful information. What are the qualities of a good information? What are the qualities of good information? Accurate. A stands for accurate. C stands for cost effective. C stands for complete. U stands for user targeted. R stands for relevant. A stands for
Sorry.
authoritative,
Timely.
timely, and
Easy to.
easy to use. So we know about the qualities. What's the requirement? Discuss the general qualities of useful information, stating clearly how they would be benefit to Mr. Janoon, the operation director, and recommend specific measures which would improve information flow from QC laboratory to Mr. Janoon. And there are 2 requirements. One, you need to explain these qualities from Mr. Janoon point of view. And second, you need to provide some recommendation measures that Mr. Janoon should implement for the reporting process so that these things, these issues can be highlighted. So first we can explain these qualities. Don't need to explain all the qualities. You can explain 3, 4. So information that is going to be provided to Mr. Janoon should be accurate. Should be accurate means should be containing all the relevant data. Especially why these products failed laboratory test. What is the reason? So that reason must be included in the information report. It should be cost efficient. Ultimately, to get information, to get report, company need to bear some cost, and that cost should not overweigh the benefits. So they need to implement some system of reporting because the rate of failed products has increased to 4%. Ultimately, company is facing huge loss, wastage loss. So they need to implement some cost to get reports. And the report provided to Mr. Janoon should be complete, mean including all the information, the detailed reason, especially he is lacking in scientific knowledge. So there should be some scientific reason explained why these products are failing laboratory test. And the information should be relevant. Relevant means there shouldn't be any irrelevant data because operation director is too busy with other areas as well. So only the relevant specific point should be mentioned in the report so that he can understand and take action on that. Information should be provided to Janoon on a timely basis so that he can take timely action to resolve and overcome these issues. And should be easy to use, mean different terminologies should not be used because he lacks scientific knowledge. So information should be in easy language. Difficult terminologies, jargons relating to that as scientific knowledge qualification should not be included so that he can understand and make some action on the reports. What are the specific recommendations that we need to give to Mr. Janoon? First, he should receive regular reports on the failure rate from the laboratory. Because while receiving regular reports, ultimately the staff working in laboratory will be under pressure. Because if he is receiving reports, ultimately they need to provide proper data, proper information. Through this, the failure rate can be controlled. He should visit regular visit by himself or any other person to that laboratory area to see whether the failed products are only failed rather than including any past products as well. But rotation of staff, he should rotate the staff of laboratory if there are other staff available, because sometimes there was a collusion can be broken if you rotate the staff member, like shifting one staff member to other area, other member to other area. Because if two members are working long time with each other, so there are more chances of collusion. If you rotate one staff, there are less chances of collusion. So we can provide three recommendation and we can discuss some qualities of good information. Good question. Part A, general. Part B, from scenario, we need to highlight the weaknesses. And part C, according to that scenario, we need to provide recommendation. Let's take a break. After break, we'll discuss few more things.
Hmm. It's clear at 50 words, so we have to take it. देखो आजकल क्या सारे के तो मैंने पॉसिबल नहीं था मैंने तो लेकिन कहीं 10 वर्ष का आज सुनाएंगे ये बचा ना मुझे सॉफ्ट कर देना फिर हम के साथ डबल मिल कर देंगे nhưng mà những cái đó phải giống như là cái đêm chiều học thôi nên nguyên cái đến từ là system nên cái lối sang nó chờ nó sáng của nó chỉ cái con của nó chỉ cái đêm chia sẻ sẽ bị chia sẻ là bị chia sẻ ngay cái có cái đấy cái thứ bỏ chocolate hay là chocolate hay chocolate hay rồi cái ra cái
ce mashi ta ce in mana ta kuma tura musu wannan har yau ma ko ya kira ta ko ya ce mu ya hakuri a wani suka rau ita wanda kuma ya mata mansa sannan kuma ya ma faɗa mu wai shi yana da wancan ba yake su ta cin mutunci wannan zancen ma wallahi haka ya ce ma tana ji ta faɗa wa mamanta na ce da ta sani ta faɗa mata ina jin wani ina yau kuwa in sun kira ka ko kin ga kawai kuɗi za ki basu wani to me za ki ci zancen ka ce musu an ji ba za a yi aure ba ai ƙarshen cin mutunci ne na ce musu ko ita Hauwa ta ce ba za ki na ce na sun je za ki ce sun ki ga kawai kowa ya haƙura ba na ce ai idan mutum ba shi da mafaɗi shi ne zai haka ma me ya mafaɗi ne bari ya ka kin kira yanzu kan kira shi mm, 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 mm. Don ku bar shi ba kina mahaifiyarsa da kyau kurge Mm. Ni fa I really love this version of him. This new version of him. What says it's like mm, 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 mm. Bari kalli ki gani ina nan. Kalli ki gani ina nan. Na samu gurin kwana. Abinci a kai. Na ina da ƴa ma ina komai amma ina cewa nan shekara biyu. Sai rabuwa zan da mijina. Ina da na sani da wani na aura wanda zai mutunta iyaye. Shi ya samu za a mishi komai kuma ya samu ƴar gata ɗan arziki mai mutunci ƴar dangi wacce za ta mutunta mu da za ta mutunta mu shi bai so. Wallahi yanzu ina tafiya da muka fita break daga asibiti ina tafiya zan siyo shayi har na dawo tunanin da nake ni abin da nake nema na samu shi ya samu yana wata kalar da shi. Ba shi da hankali. Wallahi ba shi da hankali. Shekara 40 yake neman yi. Yanzu kin ga mami ki kira ku wallahi ni ma haka mai amma kin san me ya kamata ce fa da yi haƙurin zuwa da siyan ba da sinan ce idan ka sun sun gani wannan wajen ba gara a danƙa mata shi ɗan iska ne ba ba. Mm, mm, mhm, mhm. So, how many minutes is this break? It's such.
So We are covering risk. Two chapters we have covered. One is on internal control and other is on internal audit and audit committee. Now we are moving towards chapter 13. In chapter 13, we need to discuss about risk management process. That is also called risk management strategy. So every business have to prepare their risk management strategy. What does it mean by risk management strategy? Risk management strategy means 4 steps. Number 1, identify business risk. Prioritize the risk. To control risk. And to monitor risk. So every business have to identify their business risk on a proactive basis. I mean, what are the risk business will face in future? They need to identify on proactive basis. Not only business need to identify risk, they need to prioritize risk. Prioritize risk, which risk is having a bigger impact on the organization and which risk will create lesser problem for the organization, so that the higher priority should be focused more. And they need to define some policies how to control the risk, so that if they are facing any risk, they should be aware how we can control, so risk could be under control. And they need to monitor whatever the policies they have defined, whether those are working properly or not, whether business risks are under control or not. Not only business, even in our daily routine life, we also involve ourselves in risk management process. I mean, what risk we gonna face in future, we identify on proactive basis. What problems we're gonna face in future. We prioritize them. Which problem we should tackle first, which we should leave. How to control those problems? Some problem could be resolved through money, some problem could be resolved by spending time, some problem could be resolved by having support from others. Even we monitor whether that problem is sorted out through that control, through sorted out that control. I mean, we also prepare this risk management strategy in our daily life. In the similar way, business need to prepare their risk management strategy. They need to identify their business risk. What is business risk? What is business risk?
The risk that business will.
A risk that business may not achieve its objective. There are 3 types of business risk: financial, operational, and compliance. What is the financial? All the finance issues of business are called financial risk. Sales are decreasing, profit are decreasing, liabilities are increasing, expenses are increasing. These are what? Financial risk. Cash balance is lower. That is what? Financial risk. What is operational risk? Issues in business operations. Employee turnover is operation risk. Producing more defective goods is operation risk. Staff are not properly working as per management policy. This is what? Operation risk. Staff are getting absent. This is what? Operational risk. Ultimately, this will affect objective mean profit of the organization, but issue is where? In operations. What is compliance? A risk due to the non-compliance with law regulation. If business will not comply with law regulation, ultimately business will be facing fines, penalties. Those fines, penalties will ultimately affect what? Business risk mean objective of the organization. So business need to identify their business risk, financial, operational compliance on proactive basis. They need to prioritize risk and they need to control risk. So business can control risk. Business can control risk using a TARA framework. Business can control risk by using TARA framework. What is TARA framework? Let's discuss. While managing business risk, business need to focus on two factors. One is impact or severity of the risk. That could be low, that could be high. Impact high mean bigger problem, bigger loss for the business. If risk will occur, if risk will materialize mean occur, that will create bigger loss for the business. Impact severity high. Impact severity low. If risk will occur, it will create a loss, but that will not be bigger. Business will be able to tackle that. Mean impact low. As well as business need to focus on probability of risk. Probability could be low, could be high. What is the probability? Chance of occurrence.
So all of this is under prioritize risk.
Probability means chance of occurrence. If there are more chances of occurring the risk, like risk occur again and again, probability high. But if risk arises not again and again, in some time, some situation risk could arise, this means probability is low. So while controlling business risk, you need to focus on probability and impact of risk. If the occurrence of risk chance mean probability is high and impact is also high, I mean if risk will occur, they can destroy the business. You need to avoid those activities where probability of occurring the risk is high, also impact is high. You should avoid. Don't perform those activities where probability of occurrence risk is high, as well as impact of risk occurrence is also high. Those activities where probability of occurring risk is low, impact is also low, you should accept risk. You should perform, you should try that activity. Because even if there is anything wrong, there will be less impact and even chance of occurrence of a risk is also low. So accept those risks. Face those risks. And those activities where probability of occurrence of risk is high, but impact is low, reduce. Reduce mean define some policies, follow some policies. By following the policies, you can reduce the probability. So you need to implement some internal control, some policies, so that the occurrence mean probability of risk you can control. Though impact is low, so don't accept. Define some policy, go according to the rule, so that the occurrence mean probability you can move towards lower level. If you follow policies, there will be lesser chances of failure. But those activities where risk probability is low, but if risk occur, the severity impact will be bigger. It can destroy your business. You need to transfer those risks. How you can transfer? By taking insurance. Because if risk will occur, who will bear? Insurance company, not you. If you are going without insurance, ultimately the impact will destroy your business. So while controlling business risk, what we need to consider two factors: impact severity of risk. Severity high, it will destroy the whole business. Severity low, it will create lesser issue, lesser loss. Probability, the chance of occurrence is a high, mean risk occurring again and again. Probability low, risk occur, occasionally, not on routine basis. If probability high, impact high, you should avoid. If probability low, impact low, you should accept. If probability low but impact high, so you should transfer, mean take insurance, cover. But if impact low but probability high, mean risk occur again and again, even low impact occurring again and again will create bigger problem. So you need to reduce, mean you need to adopt some policies, and this is called TARA, TARA. This transfer is not only transfer, this is also called share. Because if you are moving towards insurance, insurance company will charge some insurance. Even in case of loss, they will not recover the full loss. You need to bear some from your pocket as well. So the problem, the loss will be shared with the insurance company. So we can say this TARA is also called SARA framework. So business need to identify their business risk. They need to prioritize risk, prioritizing based on impact severity. High impact, high priority, low impact, low priority. And business need to control risk. How business can control risk? By considering probability and impact. This is called probability and impact matrix. High probability, high impact, avoid. Low probability, low impact, accept. High probability, low impact, reduce. But if high impact, low probability, transfer or share.
So, sir, this chart is on the control risk.
Yeah.
How to control.
How to control risk. So we can control risk, mean those activities where high probability, high impact, we should avoid performing those activities. We should not put ourselves into danger.
Hmm.
Where probability is low, impact is low, we should accept. Because business is a name of risk taking. Sometimes we need to take some risk. So that risk taking is what acceptance.
But you can only take the risk.
And probability and impact both are low. But if probability low but impact high, transfer, take cover, take insurance. But if probability high, mean risk occur again and again, but impact is low. So you can reduce that occurrence again and again by adopting some policies, control, procedures, mean reduce. This avoidance is not a good option.
Then what is the good option?
Because business is a name of risk taking. If you don't take risk, you're avoiding activities, you will not be having competitive advantage in the industry. Your competitor will take risk and they will flourish. So try, if you can reduce or transfer, move towards that, because avoidance is not a good option. Avoidance means shut down your business and stay at home. Means you will not be able to get competitive advantage. So try to reduce a little bit, whatever you can, or try to move towards the transfer option. Avoidance is not a good option. Even this acceptance is also not a good option. Though now you are considering impact is low, probability is low. So might be when risk will occur, it will create bigger impact. Then it could be like suicide. So try to adopt some of the policies. Even acceptance without policy is not good thing. You need to follow some of the policy so that you can reduce as much as the probability of occurring the risk by adopting some of the policies.
So policies, you mean the risk
The better option to control the risk is what? Reduce, adopt some policies, adopt some controls, follow the policies, follow the rules. And through this, you can reduce the chance of occurring risk. So what is a risk management strategy or risk management process? This is also called role of risk committee. What are the role of risk committee? To identify business risk, to prioritize the risk, to control risk, and to monitor risk. Monitor mean whatever the policies you have adopted to control the risk, whether those policies are working properly or not.
So this is the framework we follow, right?
This is called risk management process or risk management strategy. Risk management framework is this TARA framework. This is called risk management framework. In TARA framework is called risk management framework. Mean by considering probability impact of risk, how we can manage risk. So what is the risk management strategy or risk management process? 4 point: identify business risk, prioritize business risk, control risk, and monitor risk. In fact, these are not 4 points, these are 6 points. There is 1 point above identification and 1 point after monitoring. What is after monitoring? To report risk. If company is going to produce a report on their internal control system, according to COSO, risk system is also part of internal control system. After monitoring, you need to prepare a report. How you are managing risk, what risk you have identified, how you are controlling, which risk you have transferred, which risk you have reduced, which risk you have accepted, and which risk you have avoided. You need to produce a report on risk. For whom? For the shareholder, to provide them confidence how you are managing business risk. This is also the role of risk committee and part of your risk process. Before identifying business risk, you need to define risk appetite of the business. Define risk appetite. Define risk appetite. What is meant by risk appetite? How much risk business can afford? First, you need to define how much risk a business can afford. A new business can afford more risk. Because you have started the business, ultimately you need to seek some risk. You need to accept some risk. So risk appetite is high for new business. For old business, having established in the market, his risk appetite is low. He will not seek more risk to maintain his position.
He has a reputation, market reputation.
Ultimately, your repute is there. Ultimately, a little bit repute will destroy your business. And risk appetite depends upon two factors: risk attitude and risk capacity. Risk attitude and risk capacity. Risk attitude could be of two types: risk seeker or risk averse. What is risk attitude? Overall approach towards risk. Overall approach toward risk. Approach could be risk seeker, mean business want to seek risk because higher the risk, higher the return. Or risk averse, mean business is avoiding risk. They don't want to face risk. They don't want to afford risk. And a new business is always risk seeker, while established business is always risk averse, mean their approach is avoid risk. Risk appetite also depends upon risk capacity. What is risk capacity? How much risk a business can bear, a company can bear, mean in money term, how much risk you can afford, how much risk you can bear. That is depends upon your cash reserve. If business is having 1 million in their cash reserve, their risk capacity is what? 1 million. If any of the project where investment is 1 million, it's under your risk capacity, you will afford it. If project investment is 1.2 million, it's beyond your risk capacity, out of your affordability.
Same like in person.
If business is having 1 million in reserve, they have already started 0.3 million to project. The remaining risk capacity is what? 0.4 million, not complete 1 million. And according to risk capacity, you will prioritize the risk. The risk under your capacity, priority low. The risk over your priority, capacity, priority high.
Right.
Even according to capacity, you will see the impact and severity. The risk under your capacity, impact severity low. The risk beyond your capacity, impact severity high. So what is risk management process? First, business need to define risk appetite, mean how much risk business can afford. Affordability could be high, could be low. It doesn't depend only on money. It depends upon risk attitude, mean overall approach towards the risk, whether you are risk seeker or you are risk averse. Risk seeker, risk appetite is high.
So which one?
You will face more risk. Risk attitude is risk averse, risk appetite is low. You will not involve yourself into risky project. But risk appetite also depend upon risk capacity, mean how much risk a business can bear in money terms.
So
If you are having more reserve, your risk appetite is more. If you are having less reserve, your risk appetite is less. If you are going to start any project that is under your money reserve, risk appetite low. That is over your money reserve capacity, risk appetite high. So after that, business risk to identify business risk. According to capacity, they will prioritize. And then they will consider impact of probability and control, mean either reduce, accept, avoid, or transfer. And then business will monitor whether the controlling policies are working properly or not. And at the end, business need to prepare a report how you are identifying or managing business risk for providing confidence to the shareholder. Where you will publish this report in annual reports along with internal control report. That is compulsory in America Stock Exchange, SEC, USA. According to SOX, business need to provide a mandatory disclosure report on internal control. And risk management is also part of internal control as per COSO.
want to start a business and you not have lots of money, and then you went to bank for a loan.
You went to bank for loan, this means you are having some capacity, you are having some money. And new starter business is always a risk seeker.
So,
Because if you not take risk, ultimately you will not able to run your business.
so it's fine.
It's fine. Risk appetite will be higher. It doesn't depend only on money. It depend upon
There is.
attitude, mean overall approach towards the risk, whether you are risk seeker or risk averse. It mainly depends upon risk attitude.
So being a risk seeker is.
Risk seeker is better, but you need to adopt some of the controls, some of the policies to reduce the chances of risk. Don't play blindly. Adopt some policies, procedures, rules, define some rules, and go accordingly. Okay, so there are 6 points in risk management strategy or risk management process, and these 6 points are also role of risk committee. If anybody asks, what are the role of risk committee? To define risk appetite of the business, to identify business risk, prioritize risk, to control risk using risk framework, TARA, and to monitor risk, whether policies are working properly or not, and to report on risk that should be published in the annual report. Let's discuss one small topic and then we will move towards our question. Whether we should cover that question today or in next class.
Remain less than 30 minutes.
We can cover it. So the topic is risk manager.
We have class next Friday or you are planning next Friday.
Now we will be having class next Friday.
After next Friday, then prep.
Who is a risk manager? Risk manager is a member of risk committee. What is risk committee? In a company, according to corporate governance code, there should be 4 types of committees: nomination, remuneration, audit, and risk. Member of risk and nomination committee could be either executive, non-executive, but a majority should be non-executive directors. What level directors are having? Strategic, tactical, or operational? Directors fall at what level? Strategic level, tactical level, or operational level? Strategic level. So risk manager is a member of risk committee. Risk committee include executive, non-executive directors. But being a member of risk committee, risk manager role is at operational rather than strategic. This is a separate member of risk committee whose role is at operational rather than strategic level. What is his role? His role is to define control policies. Are helping the management in defining risk control policies. But his main role is to monitor the risk. Monitor the risk means he will make sure whether the policies to control the risk are working properly or not. If not working properly, he will highlight the weaknesses. He will identify new business risk. If business is going to face new risk, he will identify and communicate to risk committee so that those should also be rolled according to the policies.
So, sir,
If business have transfer the risk to insurance company, who will communicate with insurance company? This risk manager. Communicate with insurance companies. Why? To transfer the risk. So who is the risk manager? Member of risk committee. But not only in committee, the members are executive, non-executive director, mean at strategic level, but his role is at operational level rather than strategic. What is his role? To define risk control policies or helping the risk committee to define risk control policies. But his main role is to monitor the risk at operation level, whether policies to control risk working properly or not. And if business is going to face any new risk, he will identify and communicate to risk committee. As well as he communicate with insurance companies to transfer the risk, and he help the management in preparing reports on risk.
So, that is all of the risk manager.
Yeah, these are the role of risk manager.
So, sir, you can risk manager again.
any of the person who is controlling, monitoring risk is called risk manager, who is a member of risk committee, but his role is at operational level rather than strategic level. Let's move towards a question. H and Z. This question. So there are five parts of the question. Part A is having two parts, 4 marks each, A1, A2. Part B for 6 marks. And part C, 1 for 4 marks, C2 for 7 marks. Altogether, if you see, there are 7 different requirements, 5 different requirements. Part A, for 4 marks, describe the role of a risk manager. He's a member of risk committee. His role is at operational rather than strategic. His main role is to monitor the risk at operation level, help the management to define control policies of the risk, and help the management to identify new business risks, as well as he is preparing reports on risk. He also communicate with insurance company for transferring risk. Straightforward.
Yes. So all of this are the answer of 1A.
Yeah. A2. Assess John Pentanol. Who is John Pentanol? We don't know. Understanding of his role.
Okay.
We need to read the scenario. Who is John Pentanol? What is his role? What he is doing? John Pentanol was appointed as risk manager at H&Z. He's a risk manager at HSG company a year ago, and he decided that his first task was to examine the risk that faced the company. Yes. He concluded that the company faced 3 major risks, which he assessed by examining the impact that would occur if each risk were to materialize. Materialize means occur. He assessed risk 1 as being of low potential impact, as even if it materialize mean occur, it would have little effect on company's strategy. Risk 2 was assessed as being of medium potential impact, while a third risk 3, was assessed as being of a high potential impact. He considering assessing 3 risks: risk 1, low impact; risk 2, medium impact; risk 3, high impact. When John realized the potential impact of risk 3 materializing, because its impact is high, he issued urgent advice to the board to withdraw from the activity that gave rise to risk 3 being incurred. The company should not perform this activity relating to risk 3 because its impact is high. Then we should move towards avoidance option.
Share the
When we should move towards avoidance option, when we should adopt avoid option,
high.
when there is a high impact as well as a high probability. Has he considered the probability? No. Might be risk the probability is low. If probability is low, you can transfer rather than moving toward avoidance. But he is saying company should stop this activity, withdraw from this activity, from the activity that gave rise to risk 3 being incurred. In the advice, he said that the impact of risk 3 was potentially enormous, mean too high, and it would be irresponsible for H&Z company to continue to bear the risk. The company will not be able to bear it. It is irresponsible if you don't withdraw from this activity. But he just assessed the impact, not the probability. And his main role is to provide advice or different options to the company. Based on probability and impact, he cannot make the final decision. And here he is like providing the final decision instead of providing different options. Whether company can reduce or not, whether company can transfer or not. The company commercial director Gene Zylan said that John Pantanal and his job at HZ company were unnecessary and that risk management was very expensive for the benefit achieved. She said that all risk manager do is to tell people what cannot be done and that they are pessimist by nature, afraid, discouraging people. She said she wanted to see entrepreneurial risk taker because business is a name of risk taking. In H&Z company and not risk manager who she believed tend to discourage enterprises. They are saying stop this, stop this, stop this. Might be that activity is the main source of business.
Yes.
If you stop this, what business will do?
You said it's better to tell you.
Because he is not understanding his role properly. His role is to provide some options to the management, not the final decision. Management will choose. And he should assess both probability and impact. Might be probability is low. If probability is low, there is option of transfer rather than avoiding. So John replied that it was his job to eliminate all of the highest risk at H&Z company. Is that his job to eliminate risk? No, his job is to monitor the risk. Monitor mean whether control policies are working properly or not. And help the management in defining control policies rather than eliminate.
But it's like John is like me. We are we don't want to stress.
He said that all risk was bad and needed to be eliminated. No, risk could be transferred, could be reduced. Even we need to accept some of the risk. He said all risks are bad and need to be eliminated if possible. If couldn't be eliminated, then it should be minimized. No, first you should look for minimizing. By adopting policies or taking insurance to transfer, if there is no option for reducing or transfer, then you should move towards avoidance. His concepts are weak, wrong. First, you should look for reduction, minimizing. If you are unable to minimize, then you should avoid. He's saying first we should look for avoidance. If you avoid it, how you can minimize? So he also added that risk manager has an important role to play in organization risk management. Yes, risk manager play important role, we know. Part A2. Assess John Pantanal's understanding of his role. So we can explain for 4 marks, John Pantanal is not understanding his role properly.
Wow.
He is considering his role is to eliminate the risk, while his role is not to eliminate the risk. His main role is to monitor or control the risk. Help the management in defining control policies of the risk and to monitor whether those policies are working properly or not. And he is misunderstanding the concept of controlling risk. He is saying first we should move towards avoidance. If cannot be avoided, then we should minimize. No. Business is a name of risk taking. So we need to perform the activities by taking the risk while seeking the risk with first looking for any minimizing option. If cannot be minimized, reduce or transfer, then in extreme cases, business should go for what? Avoidance. For 4 marks, we can explain. Is that part B of the question? Part B for 6 marks? With reference to a risk assessment framework as appropriate, what is risk assessment framework? TARA framework. Don't need to explain TARA framework.
Yeah.
They haven't asked to explain. With reference to risk assessment framework as appropriate, criticize John advised that H&Z should withdraw from the activity that incur risk 3. Criticize. So we can draw risk management framework, but don't need to explain. If the probability of impact and probability both of occurring risks are high, then business should move towards avoidance option. Here, for risk 3, John Pantanol just assess the risk rather than the probability. If probability is low, then this option is not appropriate for risk 3. If the probability low but impact is high, we should move towards transfer.
But sir, in the exam, we cannot be.
We should move towards transfer. And John Pantanol just assessed what? Only the impact rather than the probability. It might be for risk 3, probability is low. Then business should move towards transfer. Transfer means business can transfer the risk by taking insurance. And his role is to provide different options to the management based on probability and impact. What are the options business are having to transfer the risk? Sometimes we can transfer risk to other departments. We can spread risk to reduce the chance impact of occurrence. We can involve some of the experts, like we can outsource to transfer the risk. We can outsource some of the activities to experts. Through this, even we can transfer. So he just considered the impact rather than probability, because if the probability is low, then there is option of transfer rather than avoidance. For 6 months, we can provide answer.
We cannot draw this framework in the exam.
You can draw this framework, but don't need to explain this framework. Don't need to explain all the quadrants of the framework. Just need to link with the relevant. And before part C, there is a small line. Jane Zylan expressed a particular view about the value of risk management in H&Z company. What was his review? Risk manager are expensive. They are pessimist. What they do? They just try to say what can be avoided. They are useless. So Jane Zylan expressed a particular view about the value of risk management in H&Z company. She also said that she wanted to see entrepreneurial risk taker. Define entrepreneurial risk. What is entrepreneur? Business. Entrepreneur means business. Who is entrepreneurial? Businessman who is running the business. Whenever we are going to define any risk, we always start our sentence, our risk to the business. So entrepreneurial risk means our risk to the business due to poor strategies adopted by the entrepreneur. Like not considering all the factors into account while making a decision.
Yes. Like,
Because if he is considering all the factors while making decision, there will be no risk. When there will be risk? When entrepreneur mean business manager not considering all the factors while making a decision, there will be problem. In this is strategic levels. The people sitting at strategic level while making a decision, they haven't considered all the factors into account. So due to that, if business is facing any risk, that is called entrepreneurial. A risk to the business due to poor strategies adopted by the entrepreneur by not considering all the factors while making decision. And explain why it is important to accept entrepreneurial risk in the business organization. Because business is a name of risk taking activities. Higher the risk, higher the return. So that's why in a business, entrepreneur risk taker are more important rather than risk averse. Because to take competitive advantage in the industry, sometimes you have to accept some of the risk. For 4 marks, we can explain. Part C2 for 7 marks. Critically mean in-depth explanation. Evaluate positive, negative, both point of view. Jane Zylan's view of risk management. In first, we need to provide arguments in favor of Jane Zylan's view. She is right about risk management. Why? Because John Pantanal is saying to stop the activity where impact is high. While if a probability of that risk is low, that can be transferred. Might be that activity is more important for the business, strategically important. This means withdrawing from that activity is going to stop the business. So that's why his view about the risk managers are true. No, James Island's view about risk managers are not true because the risk manager play important role in the business. They help the organization to monitor the risk. Without risk manager, business will not be able to monitor whether control policies are working properly or not. They help the business to identify new risk business is going to face. So they play important role. They help the management in having a license communication with the insurance company to transfer the risk as well as preparing reports on the risk. So they are important for the business. I mean, some arguments we need to provide in favor of her views and some arguments here against her views. Please read the answer of this question and try to attempt it. Risk manager, Tara framework, entrepreneurial risk, what is that? And views of James Island against risk manager. So that's it. In next class, we will try to wind up this risk area. We'll cover 2-3 more questions. And then we will move towards strategic planning area, the other half of our SBL syllabus. That will be more interesting. So see you next lecture.
Seems